everyone. Thank you so much for being here. Good afternoon, live from New York out here. I'm so pleased to be able to host this panel. My name is Katie Zachariah. I'm former counsel to Zhonglun Bank in Beijing, or Zhonglun Law Firm in Beijing. Did a lot of cross-border transactions, so the tariff conversation is all familiar to me. I'm happy to introduce our speakers, and if they could please give a brief introduction about themselves. We have Dallas Counts, the COO of Vendormint, Dan Sanker, the CEO of TariffNinja, and Luke Briggs, the CEO of New Nexus. Dallas, would you like to kick us off?
Sure. First of all, thanks, Katie, for having me today. I'm really excited to be here along with Luke and Dan. So Dallas Counts, CEO of Vendormint, as Katie said, I've been in the retail industry for about 20 years now. I started my retail career at Walmart. Spent about 15 years there before I left and went to a company called White Spider, eventually acquired by Essential and Flywheel Digital and Omnicom. And now I've been on the journey of Vendormint for a little over a year.
Wonderful. Dan Sanker from TariffNinja.
Yeah, thanks. I had started, well, I've been in the consumer packaged goods and retail industry for most of my career. Had started another company in the logistics, tech-enabled logistics space, consolidation to retail for CPGs, sold that company, started a SaaS company, sold that company, and then we started TariffNinja, and it was exciting, but it's gotten more interesting and exciting every day. So we wake up every day looking for some news, but we barely have to look.
Always a new headline. Actually, you're right. Almost every day on tariffs, correct. And then Luke Briggs, the CEO of New Nexus.
Hi, thank you for having me as well. Luke Briggs, about 25 years in consulting and CPG. We're an omni boutique agency helping clients and vendors navigate big box retail from an omni perspective.
Wonderful. And as I said, Katie Zachariah, former counsel to Zhonglun. I'm on Fox and a legal and political analyst. I would also just love to kind of set the stage. We're going to do about 30 minutes of discussion where our speakers, panelists will answer some very specific and tailored questions, and then we're going to open it up to a Q&A. As they're talking, if you have specific questions, jot them down, submit them as needed. Also, at the end, if you feel free to submit them as well. This first question is going to be for all of the panelists, and it's going to be kind of on understanding tariff awareness in today's retail landscape. Again, an ever-changing topic. So we're going to start first from all of you. Why is tariff awareness now a core part of retail and operational strategy? Dallas, if you'd like to start us out on that.
Sure, absolutely. I think in order to understand this specific question, I think looking back a little bit about like the history of retail, where we've been is kind of core. When I first started in retail, 17, 18, almost 20 years ago, it was a little easier to do business with big retailers because you really just had to provide them one low cost. In today's environment, that has evolved. Amazon coming in, e-commerce, omni-channel really coming in. Now, the supplier community doesn't just have to give one cost. They have to be very cognizant of the different types of channels of shipping lanes, the costs that those are adding with e-commerce. There's data costs where you're having to potentially purchase data, and not just retail data, but also e-commerce data. Retail media is a big thing now, and so there's another added cost that keeps coming in. And the retailers have realized they've taken on a lot of burden, and so now they potentially have costs where if you're not fulfilling correctly, they may be fining you. And so the tariff to me is one more piece on the ever-evolving trade management for these suppliers with these retailers, and it just makes it that much more difficult to manage the full amount. And so I think as I think about why this is so important, with the tariffs coming in right now, it's because of all these other costs that have also been added on. So that's kind of where I see this fitting in.
Dan or Luke, do you want to add anything?
Yeah, I'd be happy to. I guess the biggest issue is the dollar amount. So we have had tariffs. Tariffs go back. There's tariffs mentioned in the Bible. Tariffs go way back. So tariffs just didn't matter that much. So when we're out talking to customers and consumer packaged goods companies and retailers, it really didn't matter as much that maybe your customs brokerage department or your compliance department was on the ball, got everything perfectly right. And maybe it didn't matter that much that everything was classified right. And maybe it didn't matter if you missed a few drawback opportunities to get money back when you re-exported on or couldn't use an imported product because it was damaged. That is just not the case anymore. And then the other thing is, from a planning perspective, you have to report your projections a lot of times. So if you need to report projections or you need to go see a buyer at a retailer and you don't know what your pricing will be in 3 months, 6 months, but you need to somehow sell the product and you need to put them up with a price and you don't know what will happen. All that stuff has gotten really complicated. It's one issue, but the other big issue is the dollar amounts. They're, make it or break it numbers when they used to be just interesting numbers. And it's so important to get it right, but it's really hard to get right because it keeps changing and it's beyond the scope. Sometimes people will ask me questions and I'll say, well, I don't know the answer to that question. Sometimes we'll meet with, experts who have been doing this for 25 years and they say, I don't know the answer to that question. That's interesting. That happens all the time. And what that means is we all need business process. We all need teams, but we need some kind of technology so that we can figure this out. It's beyond the scope of a person to manage it anymore. And it's not a small issue. So I think that's why I think the awareness concept, the tariff awareness concept, we have a lot of things in this industry, like Dallas just mentioned, to be aware of. You can't be aware of all of them, but you do have to be aware of the big ones. So I think that's a great way to look at it, is awareness.
Luke, would you like to add there?
Yeah, I think Dan and Dallas did a great job explaining it. What I would add is for our vendor partners that are small to mid-size, even to large size, it just creates a lot of volatility in their P&L, especially when they're selling goods versus services. And the cost to carry that can be quite large. And not being able to properly forecast or understand that can create a bit of stress in their P&L. So they're looking for clarity, they're looking for support. They're looking for ways to offset that because, as Dallas mentioned, there's a lot of different fees and a lot of different structures that, if we're not disciplined in that P&L health, it can cause some strain within the vendor community.
Absolutely. And again, I'm going to keep going with all three here. We'll get into deeper questions a little bit later, so we'll keep these a little bit broad. How do tariff costs cascade through pricing, promotions, and retail negotiations, and kind of what are you seeing with that? And feel free to jump in.
Luke, I would imagine you're having to deal with that every day.
I think it varies by category, but I think a lot of transparency with the retailers is critical, and really understanding where the tariffs are and where they're going to go. And then how do you have just realistic conversations of the impact to costing? Because, as Dan mentioned, it's real dollars. In some cases, it's substantial dollars. So it is playing a role. Our retail partners have been very supportive and understanding to listen because they're on the journey with us. And so I think having that just transparent dialogue and somewhat of a visible tariff impact to your P&L really helps in that conversation.
And we've had conversations with some of the retailers just in passing, and some of what we hear is just some frustration. It's, the CPG, the suppliers come in and there's an expectation that there's a job to be done, which you guys are doing, which is trying to figure out how to mitigate it, not just telling it as a story. Like the concept where you can come in and just say, well, there might be a tariff coming on our product, so all this stuff I'm going to present to you might change. That's not an okay conversation. The okay conversation is, here's the different scenarios that might happen. Here's the probabilities of them happening. I know the elasticity of demand for my product. Here's what would happen if the price goes up to this. I know basically what our gross profit is. I know what your gross profit is as a retailer. Here's what could happen. Here's our plan A, here's our plan B, and here's our plan C. I think that's a really important thing to be able to do when you're talking about going from, maybe a place that had a 3% tariff that just doesn't matter to maybe a change that has a 100% tariff or a 39% tariff. That might mean that the category changes. So I think that part has been the most interesting, is the scenario planning piece.
Yeah,
Dallas?
I think I would chime in there a little bit with Dan, right? Like a lot of our clients are um, obviously coming to us in a way because they are trying to figure out how to offset some costs. And our intent, right, is to look at one of those pieces of the many different factors that we've outlined today, which is specifically within how your invoicing your POs are generated, and you get deductions and chargebacks. And so what we like to do in order, because they know this tariff's coming, like Dan was saying, maybe they're going from a 3% to 100%. Oftentimes with these new policies that retailers have in place, they may be incurring costs they don't need to. And so we try to help them optimize their supply chain so they can offset that. And I think if you can't figure out how to offset those costs, then back to your original kind of question there, Katie, it's like, how do you see this coming in price? It's, I either have to raise my costs, I have to raise my retail, maybe I don't get to have the Christmas promotion I was hoping for, maybe I was going for a really big Black Friday deal with the retailer, and now I don't have that ability. And then, obviously that directly starts to impact their core business, and then it just kind of starts to cycle over again. And so a lot of scrutiny really around what that looks like right now with some of these larger costs from tariffs coming in.
And you all actually alluded to this, and if you want to give any kind of further clarification on what you're seeing with common misconceptions that the brands have had about managing tariffs and trade classifications, if there's any kind of pattern or something that is you can pinpoint that's a common misconception that you're experiencing.
I mean, I see so many misconceptions, but it's been surprising and interesting and kind of in a strange way, it's kind of fun. But I guess the biggest one is that you can't do anything about it. So you have to, it's like your tax returns. I mean, you have to figure it's you have to play a really active role. There's so many things you can do to legally engineer the tariff situation. And it's not always a bad thing. It can actually be a good thing. This could be in your favor. We've had some companies that just let it happen to them. And then we've had some that think of this as, well, this is the biggest opportunity we've seen in a long time. We now have this opportunity to get all these products in and own this category, whereas we couldn't have done that before because there's a gap in the market. Every time you have these seismic changes, and this is clearly one of them, you just get this huge opportunity to come in there and either lose or win. And that's been the most interesting thing to see, is some people that just do it wrong or do it in a suboptimal way. If you're wrong to the point where you're underpaying, that's not a good thing. You're just going to get audited and pay later, and potentially it's serious. And then if you're wrong and you're overpaying, you're going to lose share and potentially lose your market. So there's so many things in there that I've seen that people just can't get their arms around. And I don't blame anybody. It's a thing that it's like when COVID happened. Like, why would you know how to deal with that? It's a surprise. So these are things we have to learn.
Dallas or Luke, would you like to add before we kind of get more tailored here?
I think from my perspective, Dan pretty well covered that one.
I agree. I think there's just a lot of confusion, and looking for clarity and from teams like TariffNinja and Vendormint, because you can make a lot of rash decisions based on the unknown or based on the assumption, which, as we've seen over the last year, there's a lot of assumptions didn't come to fruition. So how do they have clarity, guidance, and really a path forward based on multiple scenarios?
Right. So this is going to get a little bit more, this is going to be more directed towards Dan and TariffNinja. We're going to kind of look at what's happening with the Supreme Court ruling. And obviously it can go a number of ways, well, two ways particularly. And so Dan, if you'd like to briefly explain kind of what the case is in front of the Supreme Court, why it matters. And I'm just going to additionally ask if, I'll follow up, but if you also want to give kind of a two-part scenario, if they rule in favor of President Trump's executive authority, or if they rule against it, meaning there's reimbursements and a reversal of the tariff policies. But I'll follow up with that, but just kind of as a headway.
All right. Well, just stop me if I get lost in the weeds a little bit. It's an interesting thing to watch. So it's the International Emergency Economic Powers Act is the thing that's being questioned. So it's the IEEPA, and that topic is there's a couple of things in there. So it said some things the president, the executive branch can do. So, I'll go through them real quick. There's just a few of them, but declare a national emergency involving a foreign threat. So these are all things that the court needs to now look at. So is there a national emergency? And then, the president has the right in that case to block or freeze foreign assets. We saw stuff like that with, like oligarchs' yachts. So there's a big asset. President can go out and do it. And we want the president to be able to do something, right? So that's a good idea. Now the question is there overstep? So president can regulate financial transactions with foreign countries who are adversaries. It's not a congressional thing. You can restrict imports or exports as a narrow tool in an emergency. So those are the things that you can do if you're president. And we all wanted you need to make decisions fast. It's definitely international. The things that a president can't do. So in the Constitution, you can't levy taxes. It's Congress's job. So is this a tax or not? It's a good question. And then how sweeping is this IEEPA in an emergency? And then next question, is it an emergency? And then I think the one we've heard a lot lately when you watch the news is some of the justices asking the question, okay, well, can Congress just delegate anything foreign related, economic to the executive branch and just sort of step out of their job completely? And then the response is obviously no. And then, the other big question sort of broadly, which is, out there is this tariff decision just executive? Like, should the Supreme Court butt out? So there's a question on those congressional issues. And then some big one that just says, is this the Supreme Court's job? So that's all interesting. And now really what is important to figure out is, well, which way are we going to go? They're experts, legal experts. And some people go, well, I don't believe in experts. Experts say about, let's see, let me look at today's numbers. The numbers are in. So today, experts would say 20 to 30% that this is actually constitutional, meaning 70 to 80% it will be overturned, according to legal experts. If you don't believe in legal experts, the other thing we watch is there are betting sites, which are interesting. And that's real money where people, put their money where their mouth is. So sort of like the crowdsourced version of expertise with money behind it. Those today would say there's a 24 to 30% chance that they are legal, meaning, again, we're still in that sort of 70% to 80% likelihood that they are going to be overturned and said they're illegal, in which case billions of dollars, hundred plus billions of dollars have to either get lost, which is where a lot of it will go, or come back to the companies that paid for this. And then I think the madness begins, because there really isn't the process. Probably the Supreme Court is not the body that says, here's a new process for getting paid back. That's just not how that works. Congress could do that, but it would be really a long time before they could do it, and everything would expire. So it wouldn't make any sense. So there is a process for refunds in these cases, but it isn't made for the volume that's coming. So that's why it's really interesting. And the case, we don't know when it'll be resolved. Could be any time from tomorrow to next year, really. Like, it's hard to know what the Supreme Court's going to do.
And also, I want to remind the viewers, because this is also getting very specific, if you have immediate questions or questions, you can feel free to submit them in the Q&A as they're coming up, so we ensure to hit those points specifically. And Dan, as just on a specific scenario, if the Supreme Court does overrule President Trump, give me a 30-second, if you can, 45-second, what is in the best interest for the retail? How do they respond if they want a refund, or what are you offering, kind of that first step of protocol for the viewers, or anyone that would be interested?
Sure. So it's big dollars. P&G's announced something like paying, I think, $1 billion so far in tariffs. ConAgra, 3% of sales, Campbell's 4%. So these are like huge numbers. 90% of Fortune 500 companies' quarterly filings mention the tariff issue. So first of all, the numbers are big. The second thing that has to happen is there is a process. So it's not a problem. I mean, you just have to follow the process. It's like paying your taxes every year. The problem is just going to be the bottleneck and the queue to get it done and the amount of paperwork. And we've talked to some people who say, well, I only have one product that I deal with that relates to this. One product can be anywhere from 20 to 50 documents that need to be put together and 5 to 10 forms that need to be used in order to file properly. So, you know, the forms and all that stuff, they're going to manage refunds, protests, supplemental claims to prove everything. You got to say, you have to prove it. Sometimes it's the retailer, sometimes it's the supplier, sometimes it's somebody else. Who is the importer of record? And you need to prove that you're the importer of record. So there's paperwork for that. There's a classification. There's an explanation of why you chose the classification and how this relates to this issue. The tariff, was the tariff applicable in the first place? Is it applicable? Is there a new one that might now hit you because that one doesn't make sense anymore? So you fall back into another one. And then you got to calculate all the numbers and then get, you know, prove you're authorized to actually do it. So all that stuff has to come together. And then what's really important is the timing. So there are deadlines for each container that came in and when all of the stuff happened. If you don't hit the deadline, money's gone. If you incomplete, more likely, I think what's going to happen is either you do it in incomplete filing or you do it a little bit wrong. And you know, when you deal with government stuff, sometimes you get it a little bit wrong, and then you start to miss deadlines because you're not going to get an extension. So that is an issue. And then anyone who's dealt with customs brokerage stuff, sometimes there's a line to get an answer anyway. So imagine the line on the phones and all the communication when the whole world's coming in for their refunds. And then now that's the back end, and that's the stuff that most companies don't even really like to talk about. There's CFOs that have to deal with stuff. You have to disclose on your financials already. You should be disclosing in the notes that you may get money back and how much.
Thank you, Dan. I want to get it all. We want to get into all the details, but I also want to make sure we move quick, that we move through to hit some topics. I'm going to jump a little bit ahead into kind of and I'm going to specifically go to Dallas on this and Vendormint and discuss the role of retail compliance and optimizing cash flow. Dallas, if you're on there, ready for this, how does retail compliance directly influence supplier cash flow and profitability?
Yeah, absolutely. Thanks, Katie. So when you're looking at retail compliance and the cash flow piece, what we look at is any type of supply chain fines you might be getting, any type of deductions that you might be paying with a retailer, and that's very broad. So from a deduction, chargeback, and or post audit, that can include things that are valid, like you might offer a cash discount if the retailer pays you in a certain amount of time. You may offer a damage allowance. You may offer a new warehouse allowance, all these different types of allowances. And so the totality of that for an individual supplier can be anywhere from 3 to 8% of their total cost. And so it can be significant. And so when you pair that with things like what Dan was just saying, where you could have a tariff coming in now that could be 3 to 8%, now you've doubled an exposure that maybe before the tariffs were a thing, you kind of considered these deductions as a cost of doing business. I think Dan was saying, you know, it was there, but you didn't really pay that much attention to it. Even though it was large, you had breathing room. But now that you have all these additional pressures coming in, you're really needing to focus in on the health of your P&L. And this is one that if you really dial in, you can minimize it. Whether you're incurring invalid deductions, meaning maybe the retailer owes you money back because they miscounted a pallet that came in and they shorted you, or maybe you created a PO issue and you actually created a deduction or an invoice issue that created a deduction that's valid. those are things that you can work on as a company to address directly. And you can minimize this exposure within your compliance and within your deduction in the P&L. And so we encourage our clients to look at not just as us as a let's go get money back for you, but our clients, we're saying we're going to be in this together because we're going to identify areas where you're out of compliance or you're creating valid deductions that you shouldn't be. And this is money that comes straight back to your P&L, and then you can turn around and use that either to help offset a tariff, or maybe you could still keep that Black Friday ad. Maybe you end up putting it towards retail media. Maybe you end up buying some of that data that those retailers are asking so that you can continue to have that great relationship with your retail partners.
Dallas, I think you've all alluded to it. It's kind of this crescendo up to really what best practices or automation tools can suppliers implement to streamline this, streamline documentation and communication so there's effective feedback loops and you're able to deliver, or people are able to kind of see this and understand it?
Yeah, it's a great point. You know, when we're working with our clients, one of the things I think that we see is one of the challenges and why this may not have been tackled is it tends to span multiple verticals within an organization. So you have a accounts receivable, you have a salesperson, you have a CFO, you may have replenishment, your supply chain, and they all own individual pieces of this broader program. So like when you look at no different than tariffs, when you look at deductions and chargebacks, there's no one party that really kind of owns this. And so when you think about pulling them all together, one of the things that we help do at Vendormint is pull those different parties together, because there are processes that need to span multiple of those silos that will allow you to either avoid a deduction in the first place, or to make sure that you can get a deduction back. So you talked about documentation. One of the most important parts of our business is what is the documentation you have from your like your POD, your bill of lading, all the different manifests that you have with your different shipping lanes, if you're using UPS or FedEx, or maybe you're using like a more localized distributor. Having that process that can flow seamlessly across all those silos is imperative. And that's where we want to jump in and help and be able to help manage that for them so that we can, again, help them get that money back, keep their P&L healthy. And then hopefully that makes their conversation with Dan or Luke a little bit easier as they're trying to manage that relationship on either tariffs and or with the retailer.
Great. I'm going to move to a question focused for new Nexus and Luke. We're going to talk a little bit about merchandising, promotion, and sales strategies. How can suppliers use merchandising and sales strategies to expand their physical footprint and product assortment within Walmart, Target, and other large retailers? Luke?
Yeah, great question. I think velocity obviously is king, but before we talk about velocity, it's almost a three-legged stool of kind of quality, reliability, and cost. When we talk about quality of goods, quality of product, quality of containers, or how they're meeting the expectations of their vendor scorecard. Pricing, you know, being that they're matching or aligning to the costing structures and margin structures of their specific retailer, and then reliability. Specifically after COVID, reliability of your supply chain is absolutely critical. And a lot of retailers are looking at that three-legged stool as somewhat interchangeable. And so you can pivot off of one to drive the other two. And so, you know, prior probably to COVID, costing was a big play and probably the most important, specifically in private label, where now that reliability factor, because it doesn't matter how low your cost is if you can't ship it on time and in full, and if you have challenges at port. And then beyond that, kind of velocity and productivity is absolutely king. And then are you bringing incrementality to the category, to the customer, to the guest that really drives excitement in the category? And so you're seeing a big influence of macro and micro influencers that are driving straight products going from D2C to shelf. You know, we firmly believe the product has to stand on its own before you have those influencers, but how do you amplify that and really drive consumers to the category and to the shelf, especially in stagnant categories where they haven't had a lot of excitement. But you know, food has continued to evolve, a lot more kind of proliferation into in-house brands or control brands with much higher quality. So, you know, culinary at convenience and really this home chef conversion that we saw during COVID, from, you know, the sourdough craze to what's happening on Blackstone with sizzability. And so what's interesting is that the consumers tend to be more sophisticated than we give them credit for. And so they're looking for that proliferation. They're looking for exciting items. But at the end of the day, the retailer's got to manage productivity. They've got to manage their financials and their requirements.
Yeah. I'm going to direct this question to all of you, all three companies. What does long-term success look like for brands that fully integrate tariff operations and retail planning? Dallas, I'd love to start with you.
Yeah, I think, again, kind of going back to the original where historically you just needed a low cost, right? Today, to be successful going forward, you can't just focus on having that one low cost with the retailer and they're going to blend everything. You're going to have to work across all your silos now, and everybody's going to have input into the tariff, what's happening there. And Dan, I'll let you speak on this, but I don't think tariffs are going away anytime soon. Even if, even with the outcome of whatever happens with the Supreme Court, I think you can see tariffs probably here for the long haul. And there'll be a lever that the government continues to use in some way, shape, or form. And no different, I think the compliance pieces that retailers are putting in, because they when they serve the customer that they're selling to, that's become more complex. And because that's become more complex, they have additional costs. And so they have to operate as optimized and efficient as possible. Otherwise, they end up having to increase their retails to offset their operations. And so they're going to continue to, I think, in my mind, they're going to continue to expand these compliance programs to say, hey, if you're generating inefficiencies in our ability to serve the customer, then we potentially are going to either A, not work with you, or B, we're going to penalize you financially so that you do come into our policies and that we can all work more efficiently together. So kind of working across all of these in order for the client and the supplier to be successful in the future. This has to be a role on each one of these pieces, as as Luke said, the three-legged stool. I'm going to say it's New Nexus, TariffNinja, and Vendormint at this point. Each one of these pieces has to be something that not just one individual in the company is working on, but every silo has to start understanding the inputs and outputs and how they affect each other. And if you don't do that, it's going to be impossible to have a long-term lasting relationship with these big retailers.
Luke or Dan, would you like to add to that?
Go ahead, Dan.
Luke, you want to go ahead?
Go ahead, Dan.
Oh, well, I mean, as it relates, I completely agree that each of these things unto itself is not the most important thing in the world, but if you don't have the most important stuff covered all together, you're gonna fail. So this is a really active industry now. It's not simple like it was 10 years ago. So things are happening really fast. You need business process, you need a team, which is internal and external, and we all hope to help. And you need the technology, and you bring those together, and everything doesn't have to be a fire drill done every day. And that is very well received on the retail side, because if you look like you're having a fire drill every day, retailers are going to feel it, consumers are going to feel it, and it gets passed along in chaos and pricing, and you just can't be there anymore. So your competitors are going to be on it, and the bar has gone up, and you need to be able to bring all the resources to the table.
Yeah, I agree. I think Dan and Dallas provide a lot of good insights. And I think that one thing is key. It's here to stay. There's a lot of momentum with the current administration and what benefit is perceived to occur with tariffs. And so how do you incorporate that into your planning process, your research process, your analytical process, your consulting process? So I think where people and companies can make mistakes is not carving out the right investment or the right partner to get the right strategic guidance. Nobody has a crystal ball, but there are a lot of good speculators out there and folks that have been fairly accurate in this space. And so how do you continue to leverage that? And then there's consortiums out there and agencies like TariffNinja and Vendormint that can really help guide you down that path, because the unknown can be scary. But as long as it's part of the discussion and part of the planning process, you hopefully can minimize a little bit of your risk, and maybe to Dan's point earlier, capitalize on some growth.
Great. I think what we're gonna do is we get questions, we'll ask them, but we're also gonna be able to kind of pull out a little bit more depth and information as these questions are asked. We have one right now that I'd love to get to. Can AI, and this is gonna be directed towards all three, and jump in if it's more applicable, can AI help companies manage the constantly evolving tariff rates and policies? Are there any programs or platforms being built? Great question.
Well, I can answer that one really easily. That's what we are. So we're using AI to make this a reality. So can AI do all of it? No, I don't think so. Can AI do all of anything? I don't think so, but it's fundamental, has to be built into everybody's process. And tech, ours is, we're heavily leveraging AI to figure out what's going on, what people can do differently. It's extremely valuable. And I mean, there's a whole nother topic we could probably do on how important it is and how to look at AI, but that's for another day.
I might just hop in there a little bit just on the AI question in general. You know, not related specific to tariffs, but policies in general. You know, we use AI pretty heavily in our business. We service across 56 different retail fronts, and similar to how the tariff scene is changing almost on a daily basis, the retailers are evolving their policies on a very frequent basis, and being able to stay ahead of that and understand what changes they've made so that you know whether or not you are within compliance of what they're asking you to do. And then if you're not in compliance, how you get into compliance. And then if you are having deductions or chargebacks that are maybe coming from a policy change, how do you make sure that you stay on that? And AI is really critical in the ability to move really, really fast and stay up to speed. And so I think anywhere you have an industry where something's rapidly evolving, you can use AI or LLMs, et cetera, to help you navigate that. But I think what Dan said also is really, really important is technology is great, but you have to have a good human in the loop. Without a good human in the loop, it's like technology where it matters and humans where it matters. That's still going to be the theme, in my opinion. It's you leverage it to where you can to make you efficient, but you can't fully pull out the human in that loop.
Yeah, not much more to add. I mean, Dan and Dallas did a good job, and I think for me, the one piece of advice is be careful what AI selection you go down. There's obviously a lot of different options in AI, and go to where the specialty lies, like within TariffNinja and other applications, and not just use it as gospel. How do you infer that with human touch and human mind? But there obviously will be a big shift into AI. It's just how do you leverage it in an actionable and accurate way.
Yeah, and touching on this, I think it applies to all of you, and we can maybe sweep through it before we get to that next question, which is really the human component and how can brands use scenario planning to anticipate the cost impact of tariff changes or sourcing shifts. So what is the human component? And maybe fill in a little bit more for the listeners to be able to understand kind of where that human gap steps in, especially on scenario planning on the impact of tariff changes.
Yeah, well, the tech isn't going to do everything. So from a human standpoint, it really is making sure that you address all the issues and knowing what they are. So we can take care of all that. Like I talked about, a lot of things that were sort of in the weeds that you just don't need to know about anymore. So there's no single person that knows all these little details. That's what tech is for. And especially AI. AI loves that stuff. It's like, great. So let the tech do what it does so that the people can know which buttons to push. They can see what the tech tells them. They can stop wasting their time with minutia. Mm-hmm. And then they're enabled to say, well, okay, I've got reporting that tells me what's going on. I can see all these different scenarios. I know what's going to happen. I know, maybe this tariff thing was released on Truth Social and it has a blank probability of working or happening. I know this one's actually going to happen tomorrow because it's in the books. That they're different. There's different things the human needs to do. The tech can't feel that, but the tech can tell you, here's a probability, and it's really pretty good at it. Here's a probability of this thing happening. Here's the impact of the thing happening. Here's 3 different scenarios. And it's not just like AI, it needs to be AI, but trained. So that's, I think, where we bring a lot of value. It's, we see ChatGPT, it's great at kind of giving you a good guess at what might happen. But if you were to go with that, you're going to be wrong, 20% of the time or whatever percent. That being wrong is really a big deal. And as long as we can train it to be, okay, it's trained for the specific task, it can be right almost all the time. And then the human can say, I see all that. I see the probabilities and the scenarios. Now I'm going to make decisions. That's really important.
Thanks, Dan. Dallas or Luke, anything to add quickly before we get to the next question?
I think Dan really covered it. I mean, the big thing is the subject matter expertise is never going to go away. While AI will help you become more efficient at monotonous or research intensive tasks, the person that needs to be able to sit there, read the output of the AI, and then be able to make the decision of what's next isn't going away. And so you've got to have that human there that's going to be making sure, to Dan's point, that it's trained, that it's accurate, and it's doing what it needs to do. And then so it reduces your reliance on maybe needing to have an army of people, but you still need those subject matter experts that can make sure that it's staying on track and it's delivering the results that you want it to. So I think, Dan really hit the nail on the head with that one.
All right, Luke, I think I'm going to move on to this next question so we can make sure we get through these. With tariffs driving potential price increases, how should brands manage conversations with retail partners to minimize price elasticity risk and protect shelf position?
I think Dan alluded to this a little bit earlier, and Dan, you feel free to chime in. I think it's going in with scenario planning and not looking for the retailer to give you the solution of the what ifs. So if we go down this path and this is what occurs, this is what happens to price elasticity, here's what my consumer walkaway point is, here's what it does to the category. Because every product has some level of price elasticity measurement where it's going to fall off a cliff if it goes over that. And so I think having those modeling discussions of what the summary of what if, and then really aligning of, okay, how do we pivot in the event that the what if scenario 1 becomes scenario 2 to really help drive that.
And then, the thing we talked about was the Supreme Court case. That'll come, that'll go. There'll be another thing right after it that also matters just as much. But even right now, to Luke's point, you could be coming in now. There are some of your competitors are coming in, the retailers right now, talking about what I'm going to do if I get a refund on the tariffs that I paid. And that's going to include a discussion of where's the $1 billion going that you're getting back if you're, a huge company, but to any extent, where is the money that comes back supposed to go? In some cases, it's the consumers who paid it. In some cases, it's the retailers who ate some of it. And in some cases, it's the importer or the manufacturer supplier that paid for it. That's interesting, but your competitor might say, well, I'm going to apply all that to some kind of a promotion now. I'm going to use it here at retail, at shelf price, if it happens. Or what's going to happen on an ongoing basis? The new tariff rate will be maybe back to the old tariff rate. I'm going to lower prices. So if you're not having that conversation and your competitor is, imagine what you're missing out on. It could be a really big deal. So that, I think, is to Luke's point. You just have to come in. You got to lead the discussions, and you got to come in with what I'm going to do in these circumstances. And it's so much detail that I do really think you need some kind of tech support to do it, and people, a team.
I would say, just like emphasizing Luke and Dan, as I spent 10 plus years as a merchant at Walmart. The thing that I hated the most was a surprise. Never surprise your retailer. Make sure that you are being out in front with the conversations, even if you don't necessarily know exactly what's going to happen. Just don't surprise them. Whether you're going up or down, it makes a big difference on not just your manufacturing supply chain, but on theirs as well. So be very transparent as early as often as you can, and don't surprise them.
All right, a very specific one. What is the #1 tariff avoidance strategy being employed by smaller companies versus larger retailers? More specifically, wondering how scale enables more of a strategic shift, or if there is still a scramble regardless of size. Also, are there truly any long-term winners in increased tariffs? So a bunch of points, but I think the #1 tariff avoidance strategy being employed by smaller companies is a great start.
I think from what I've seen is there isn't a #1. I thought that would happen. I thought we'd find, here's the big one, here's the second one, here's the third one. I think what I've seen is, as people use the software to model things out, they find their #1. And sometimes it's things that have been really interesting, like, we import a product, it has a brand name, we import it from another country. Well, that company that we imported from is the one who owns the brand name. So we attribute some of the value of the product to the marketing of that brand. That's not product, that doesn't get a tariff. So that's interesting and legal. And then there's other things where a lot of times we've seen things are not classified in an optimal way. They have to be accurate, but sometimes there's ways to not only classify them more accurately, but also to even go back and change either something really small in packaging, labeling, that makes it fall under another classification, which can be huge. So I think everyone needs to find their own personal, what's really important to each product. And it's so hard if you've got a lot of products, but it's so easy if you can let software do a lot of the work and AI. So then you can actually, you'll see, it's glaring. I mean, I've seen people just go, wow, that's obvious. Same thing I think happens in chargebacks and deductions. You see this, wow, I can't believe we always mess that up. And as a result, we pay all this money. We don't have to do that. All we got to do is fix this little thing. So I think, each case is pretty different.
Dallas or Luke, would you like to jump in on that question?
Yeah, to back Dan's point, there's not really a silver bullet. I think what we're finding is resource of research is very critical in this time because there's a lot of unknowns. So you tend to have fewer resources of research in a smaller company. So a larger, more funded company might be able to react quicker or have more funding to react in a more strategic way. I think the smaller the organization is, the more concerns come up of the volatility, of the capital consumption that could occur. Specifically, if let's say that they're in the baby department and they're importing from China, it could be a complete P&L buster for their business. And so, when you're resource constrained, as small and medium sized companies can be, you don't have necessarily the benefit of those large organizations who have the funding and the extra resources to go after the research and find and define the right strategy forward.
Great.
Just hopping in, I think maybe on just like the last part of that question, I think that it was something to the effect of, are there truly any long-term winners in increased tariffs? I think if you're looking at the consumer, that's a whole different conversation. But if we look at each supplier in their own regard, tariffs could drive winners in certain categories, meaning if you have three different suppliers in personal care, but they're all sourcing from different countries, not just knowing what tariff pressure that's putting on you, but it's putting on your competition is really important. So there could be these long-term winners to some degree if certain areas of the world are being more heavily impacted by these tariff pressures. And especially if that's in an industry where you may have very disparate manufacturing locations, Asia versus Europe versus South America, et cetera. Like there's so many different places that you could source very similar products. So I think there could be, in that regard, some potential long-term winners based on how people react to the tariffs that are implemented today.
Great, thank you. We have also, how can companies navigate tariff uncertainty and reduce exposure to tariff impacted inputs without compromising quality or delivery? Excellent question.
I think I want to hop in this one. I think one of the first things you should be doing, knowing that you have tariffs coming in, is truly understanding the health of your P&L across all the different inputs. What are you paying across your shipping lanes? What are you paying from your manufacturing? What is the tariff cost? What are your retailer related costs? Are you paying for retail media? Are you paying for pricing and promotions? Like, what does your trade strategy look like? Once you understand all of those pieces, you can start to figure out where to dive in. And this is one where we've seen a lot of our clients in the last 6 months really come from, is they've realized that they have non-optimized P&L, especially on the purchase order invoices and supply chain compliance side. And therefore we were able to help them optimize that, reducing, I told you that earlier, 3 to 8%. We can potentially help them either avoid paying a valid deduction or get money back from that allows them to make the strategic decision so that they don't have to compromise on quality, or they don't have to compromise on the delivery. And so I think looking at your P&L, the health of your P&L, your trade, how you're doing all that, there are areas where you can optimize that may allow you, depending on where your tariff's coming from and how large it is, to have an offset so that you could continue doing business as normal and not have a material change to your P&L. And so I think, as I think about this, that's where I start to say is understand the health of your P&L across every input into your costs and make sure that you've optimized all of them. Because tariffs, while is a really big one right now, I'm sure there's plenty of other lanes that you need to start optimizing along with tariffs.
Yeah, not much more to add. I would say, I think one of the big misconceptions can be is that manufacturing solves all. To Dallas's point, can you ensure your P&L health of all the other inputs are accurate, and you're not leaving dollars on the table that you could use to offset the impact of potential tariffs? Obviously, if you can diversify manufacturing and not sacrifice quality, that's not always the case in specialized areas where there's one source and location in the world that manufactures 80 or 90% of that product. That's where it becomes challenging.
I guess I would it's an interesting concept. It's a relative, when it's a capitalist world, you're living in a world of relativity. So if you want your quality to be better than the other guy's quality, you want your price to be better than the other guy's quality, you want your interaction with retail to be better, you want your chargeback deduction situation to be better, like you want your supply chain to be better, you want your tariff optimization to be better. I think when I watch things like on the news, there's a little bit of like the woe is me concept. It's just, you got to go fight. Everyone's out there fighting. Your competitors are they're meeting with your retailer merchants now. And they've come up with, just like with everything, they've come up with a way to solve a problem. If you can solve it better than them, you just won, and you can win, and you can still, is your quality the same as it was before? I mean, that'd be great. If it can't be the same for the same price, all you gotta know is it needs to be better than whoever's in that room right before you, because that's what's going to matter. That way you get to be there. So I think that you just have to be better than everyone, which means bringing all the resources in there and for the fight, really.
As a follow-up to that one, when should companies consider changing factories, suppliers, or sourcing countries to minimize tariff exposure? Is there a specific timeline or direct guidance or a protocol that all of you are recommending, or any of you?
I guess I would say, again, with the same bad attitude that I just had, that always, really. So part of the software is modeling out the different alternatives all the time, as opposed to bringing in a consultant once a year or once every time there's a problem to model it out. You should always know where I can get all the inputs at the best possible cost and quality and supply chain attributes. And you should know them even more specifically. I mentioned like the source of information we pull originally early on from things like social media to figure out what tariffs, where we might be headed. So there's going to be there's topic of tariffs on a country. Well, here's some alternatives. Then when it's actually legit a tariff on a country, it's already pretty late. So you should have been modeling all along, I think.
Thank you, Dan. So Luke?
Yeah, I think diversification of supply chain is always a good thing to have in your back pocket. Big CPG's done it for a very long time. Even removing the tariff piece, there could be geopolitical issues that cause challenges with manufacturing. So having alternative manufacturing options kind of in your tool belt or your arsenal, I think is critical.
Dallas?
I don't think I have much more to say than what Dan and Luke said. It's definitely not an easy decision to make. So getting all the right inputs in to be able to make those decisions is really imperative. And I think maybe the one piece to say, Dan keeps alluding to it, who is your competition that's in that room with that retailer before you? If you need to know your P&L health as well as you understand their manufacturing, what struggles they may be coming up against, because that'll help you as far as how do you want to position, where can you win. There may be instances where you need to pivot and lean in heavy on a different type of product where you know you might not be able to win on another. So like being able to really be thoughtful about your assortment, what do you have, where you have a right to win. And I think, you know, Luke's advice on the diversification of supply chain is imperative. That has been I think a theme in the retail industry for 10, 15 years in a big way. And so it's always been there, but it's been even more of a big thing. And I think you just got to keep going after it. So I agree with them both.
We have kind of a more, there's a lot of skepticism, obviously, and uncertainty with this tariff ruling. It'll be nice when we know one way or another where we're headed with this. But I think one of the questions is, what will be the political fallout? And I think we can expand that to political or business fallout if the court rules against the administration, which is to Dan's on the poly market and predictability, the 70%, if they rule against the administration on emergency tariffs. If you have any points final points on that you'd like to make.
Sure. I mean, if they rule against the tariffs, there will be a refund fest that has to be processed. There's going to be winners and losers in a really big way. There's going to be a lot of media coverage about how unfair a lot of things were, because there are deadlines, they probably won't change, and a lot of people aren't going to get what they should get. Consumers have paid for some stuff, retailers will be in there fighting, finance and accounting people will be trying to figure out what's going on. There'll be a real lot of pressure on retail teams, and they'll have to act really fast. But if that all happens, one way or another, there's going to be another thing after it. The tariffs aren't going to go away. There's other ways. There's Section 301. There's Section 232. There's two other big ways that are, I mean, there's going to be lots of other new stuff, but those are the big ones, new ways to approach it. 301 is an unfair, you know, some other countries doing something unfair. Well, that's not that hard to come up with. The other one is Section 232, which is national security related. And some people say, they're looking at it going like, well, I make cereal or shampoo or cans of soup. That's not national security. You don't have to actually prove it's a national security issue for the Fruit Loops. You just have to say that there's a national security issue in the supply chain somewhere behind it. So all of that, if this refund thing happens, it'll be a huge mess that has to be dealt with, but it's all manageable. It's just a bunch of steps. It's step 1, 2, 3, 4. You just do them and you get the money back. It's not magic, you know, it's all legal and it's like taxes. And then if it does happen, the fallout, it's not going to be some dramatic political fallout. Most likely either Congress says, we think the president wasn't able to do it before because of that ruling. Well, here's a new way that gives him the ability to do it. Or he just does it under the two other sections or some new one. But those are the most obvious ones that people are talking about. And then you've got a whole new thing happens, which is here's all the new tariffs. Here's all the new things you can do with them. Here's how to engineer them. Here's what Vietnam looks like versus China. And here's what maybe you can do. Here's a timeline of how you can do all that. So it's just another round.
Dallas or Luke, any final thoughts as we close out this?
I think just on the final thought piece, you know, I want to make sure I'm encouraging everybody that may be in attendance or is watching this later is make sure that you are taking full control of the entire process, not just tariffs. Make sure you're looking at every piece of your supply chain, every piece of your cost that you're spending with each of your retailers, all the way to the tariff front, and make sure that you're not just including one party in that, but make sure everybody from every different silo, whether that's in your transportation, your accounts receivable, your CFO, your sales team, are all participating, because it's not going to just be one of them that becomes a hero. It's going to take you all in order to really conquer these and to be, as Dan was saying, the one that is managing this best and allows them to have the best position relationship with their retailer to be able to win. So I encourage everybody to make sure that they're taking those steps. And if they don't feel like they are, like, you've got us and plenty of other companies out there that would be willing to help you take that first step.
I think the team summed it up well. I think there's still a lot of unknown. We'll get through it. You know, and depending on what happens in the economy, where inflation is, where the market is, and it's just another cycle and kind of this evolution of what we're going to in retail and the global economy. So I encourage people not to get over concerned or over scared about the potential output of it. It's just how you navigate through it, especially in those choppy waters.
Wonderful. Well, we are at about 12:30 West Coast, 3:30 East Coast. If there are any final comments that we can sum up. Otherwise, thank you all for being here, and thank you to our amazing speakers and panelists on this. And are they able to come to company website? Is there a way that if anyone has a direct question that they can contact you or get a hold of any of your team members?
Yeah, absolutely. I mean, we've recorded this, so we'll definitely be posting this, I'm sure, across many different channels. And so there will be ways for you to contact us through those different postings. Obviously, I think you guys know myself, Luke, and Dan at this point. If any of you guys have any questions, you can each, obviously within our lanes, feel free to reach out to each of us directly. But I think the other thing that I have to do is I really want to give a big appreciation to you, Katie, for having each of us here today and for hosting and moderating and making this a wonderful experience. So I appreciate you.
Thank you so much. I hope everyone has a wonderful day.